doing DeFi, greatest in the world, and they finally about to see why. What you know about XRD? I'm smart money, I ain't never on a decline. What you know about NFTs? It's not just Ace, when you finally gonna realize you need scalability, need more utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.
Hello and welcome. I am Piers, CEO of RDX Works, a core developer of the decentralized finance protocol, Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the products, assets, and services that are powering the DeFi revolution. Today, I'm joined by Nikita Ovchinnik, co-founder of Barter. Barter is a smart router program to provide the best possible swap routes in DeFi based on what the user wants to achieve. Barter has already done over $4 billion of volume on the Ethereum mainnet in the last year. It is the number one solver in terms of market share and has already saved users over $1 million. Barter is a solver on CoW Swap, on UniswapX, and other DEXs that use user-based intent systems. Nikita, thank you so much for coming on the show.
Hi, everyone. Thank you, Piers, for having me. It's a pleasure.
So, let's just get started with the basics.
Right.
What's your background and how did you get started in crypto?
Right. So I've been in crypto since 2017. I've heard about Bitcoin in 2013 when I was studying at Nottingham University. And, we had an amazing Italian professor who introduced us to blockchain and crypto. And we spent a couple of seminars learning what blockchain is and how Bitcoin works. And we concluded that, Bitcoin is never going to be accepted by institutions, that a lot of use cases come from, shady gray areas of economics. And that blockchain is a phenomenal tech, but, crypto you should avoid at all costs. And I was living in this paradigm for 4 years, from 2013 till 2017. And in 2017, I was investing in stocks and I saw crypto was going up. So I thought maybe I should buy some coins and dive deeper into it. And of course, I bought Ethereum. Ethereum was, my first thing to go.
Yep.
And, I even attended in person a lecture by Vitalik. And it was quite nice, we dived into very complex, economics and cryptography concepts. And I thought, okay, maybe I should, get my first experience and get my first job in crypto. And that's exactly what happened. And my last full-time venue was at OneInch. So, I was working for a gaming company called Abyss, and we were, trying to build a platform like Steam with a lot of blockchain features. And I was head of BD there. And we started to engage in DeFi because we felt like centralized exchanges have a lot of power. And, you have to discuss listings and they have a huge control over success of your project. So we felt like DeFi is the way to go. And we stumbled upon OneInch, we engaged with the guys and really enjoyed our conversation, did the marketing together. And then I left Abyss to join OneInch as a first outsider employee. For two co-founders.
Before we go into OneInch, I think that there's a really interesting point here, just around crypto cycles. Like your trigger into crypto was the market movement of crypto. So
absolutely,
crypto started going up 2017. You're like, hey, I should buy this, and then
yes.
then there was the sort of discovery process afterwards. And I think that a lot of people sometimes decry the boom bust cycles in crypto, but what's really interesting in it is that it continually generates attention, and that attention does pull people in. And I find it so interesting how often we'll have a guest on who got their start in 2017, or got their start and before that got their start around one of the Bitcoin booms. So 2013 right. Seems to be a key year. 2017 is a key year. 2021 is a key year. And it's all of these points where things raise above the parapet and everyone goes, oh my God, this crypto is doing something. I should go check it out. So you dive down the rabbit hole.
Yes.
And you started looking into blockchain, crypto, DeFi professionally. You started engaging with OneInch. You liked it so much, and you joined. So what did you do at OneInch?
Yeah, so I was in charge of business development. I was helping the team with integrations, investor relations. So pretty much everything what we did with third parties went through me. And I felt like 1inch has, this great, I would even say insane product market fit, because 1inch was saving users money, splitting, the trades across different dexes. And, it just organically grows through the word of mouth, because the product was very nice.
And so so you joined 1inch when I think you were the first employee at 1inch, right? So super early.
Yes.
And then 1inch went through this insane period of growth. What was that like? What was it like being in the company, from being the first employee to this sort of multi-billion-dollar, from the point of view of the the amount of flow that was going through it?
Yeah, so I joined 1inch in January, February 2020, and with the goal of, I had some experience in terms of fundraising. I knew how to like a lot of wallets with whom I've interacted at my previous job, and I felt that we can do so much and grow so fast. And so I joined, and we had this really cool agreement from I guess from everyone's point of view, that I was so convinced that 1inch is going to be big, that I said, the guys, you don't need to pay me anything. I'll join. We'll see the results. We'll fundraise, and then you will enroll into like this proper business, because 1inch also was not like making much money. It was fully decentralized, transparent, and so I joined, and then a pandemic happened. It was January, February 2020, and the pandemic happened. So, all the prices went down, and the market was like very risky. No one knew exactly what's going to happen. But, we've been working, we've been growing, the metrics were going up, and then DeFi Summer happened. DeFi Summer happened with compound issuing token. And in 1 week, for example, I remember 1inch was doing, let's say, $2 million a day of trading volume, and then it went up to 11. And suddenly everyone was like, wow, what's going on? How do you how do we engage with like DeFi closely? How do we buy assets? And there were a lot of, interest in Uniswap and, any DeFi application at that time. And that's when like explosive growth happened. And it was amazing, to experience it from this first row.
Yeah, I can imagine. And what was your, what were you spending most of during that like explosive growth period? Yeah. What were you spending most of your time doing?
Well, we were looking for ways. It really helped us to convince and explain to various wallets who at first were not super excited about adding, swaps natively into the system. Right. And every wallet, they have a pipeline of different things they wanted to build and implement for like next 6 months. So swaps were at the very end of it. And then when we explained that they can have like custom fees, they can earn some money on top of it. They don't need to lose their users who would go to some kind of third-party dApp or, as a platform, and just perform everything inside. So that was a big revelation to everyone and helped a lot. At the same time, investors who originally were not yet, convinced about how DeFi can grow, what kind of volumes and metrics would be. Like initially, many investors told, like every DeFi protocol that you guys are doing like great things. It looks like a good business. It will probably be worth $30 million in like 2-3 years, but those are not like VC returns. And then with DeFi Summer and Compound showing how you can decentralize with governance token, everyone was like, okay, we have to hop on this train. Let's do something.
Yeah, I can imagine it was just such a crazy period. And so you guys got I know that 1inch got a decent chunk of investment during that time, yes. and sort of periods after. And I as I understand it, you guys got invested in by FTX as well. So like, yes. What's the story behind that?
Right. Oh, this is this is a cool idea story. So when we were fundraising at OneInch, it was kind of like, I would say, a first fundraise for all of us. So we were asking all investors and just any parties for various advices. And I would hop on and, receive a feedback from investors. And at that time, now investors, they're very busy. They will ghost you and they will just hop on to the next thing they're going to research and dive deep. But at that time, everyone was more closer to each other. There were less things going on. And they were happy to, hop on a call and say what went wrong, where they see weaknesses, and just give you very comprehensive feedback. And I was asking everyone, who should we look up to? Who is doing great things? Who should we take example from? And everyone was saying look at FTX. FTX is growing like crazy. They started in a small niche. They saw that being a market maker is one game, but the market is kind of controlled by centralized exchanges. So from Alameda Research, they're launching FTX, and they've been fundraising successfully, delivering, building up community. So yeah, we thought, okay, maybe we should engage with FTX, and we hopped on a call with them. We were introducing them to DeFi, and OneInch became their first, DeFi investment. And I even remember 1 year after, when already, Solana was big and everything was big, OneInch was still one of the top performant investment portfolio. Maybe it even spoiled them because they felt it's so easy to find good projects and invest in them and get good returns.
So what you're saying is basically you guys are the reason that FTX went and YOLO'd a bunch of cash into crypto and then failed. Is that what you're saying?
No. Nothing to do with that. We are all about transparency, efficiency, good relationship.
Yeah. Okay. Well, I mean, interesting. Definitely an interesting piece of history. So let's dive into Barter a bit more.
Sure.
Just very simply, let's start right at the top. What is a smart router program? What does that mean, and why should someone care about it?
Right. So Barter is like an invisible hand of the market that powers third-party dApps that want to have access to routing or potentially want to integrate in other ways, liquidity providers or something, or even maybe a market maker. And we, help them connect to existing order flow from partners like, CoW Swap, or platforms like CoW Swap, UniswapX, and others. And we always provide, as transparently as possible, the best kind of routes on chain that tap into majority of publicly available liquidity sources. And we are trying to build a protocol out of it. We are trying to decentralize that every user can verify at any given point in time that they received the best possible outcome for the tokens that they had. And I think it's a big question because majority of the platforms act as black boxes. And you see the result, but you're not exactly certain, how did it get there? Why did it get there? Was and it's wrong that inside every block on Ethereum, there can be a user that bought ETH, for example, for $3,000 and someone else who paid $50 or $100 more for the same asset. So we are trying to, eliminate it across all different venues, introduce new features cross-protocol coincidence, so on. So we call them Barter trade. That's why actually our protocol is called Barter. But yeah, maybe we should first dive how I got from OneInch to Barter. I think that would be a good step.
So let me just read that back to you a little bit.
Please.
So
yeah, of course.
A user doesn't really care how a swap occurs. From the point of view, a high level, I'm a user, I've got Bitcoin and I want to swap that, or wrapped Bitcoin, and I want to swap that for ETH.
Right.
And I don't care how that happens. What I care is I get the best price possible. And in DeFi, you have this massive explosion of the number of venues in which you can trade. And within these venues, there's also a massive explosion of the number of pairs that you can trade across. Plus, Correct. You've also got bridging, and you've got other pools of liquidity that exist elsewhere. And so you have this multi-factor, multivariant problem which is actually very difficult to solve. There's a lot of mathematics that would basically show that to be sort of an ON hard problem, right? And so your problem is, given all of these places, the user currently has two kind of solutions. One is they pick a venue. They go, all right, I'm swapping across that pool on Uniswap. I want to go from wrapped Bitcoin to ETH. I'm going to just go and use that pool on Uniswap. The other option they have is using some on-ledger aggregation services. 1inch is an example of that, right?
Yes.
So I can go to 1inch and I can swap against 1inch, and 1inch will be integrated into a number of venues.
Right.
What Barter is doing is the next level up. It's kind of going, if I understand it correctly, it's kind of going, we can kind of just connect anywhere. We'll just go, look, there are many places in which you can swap. And what we'll do is we'll work out what the right set of places are, and then we will make sure that transaction occurs. Now, what I'd like to get some clarity on there is the user actually submitting the transaction, or is Barter submitting the transaction?
User is submitting a transaction, and then it goes to contracts of either CoW Swap or someone else. And then we are, just facilitating the route and, like navigating this through, the dark forest.
Right. So at the point that the user submits it, has Barter already provided the route, or the user submits, Barter provides the route, and then it finalizes?
Right. So with order flow auction systems like CoW Swap or Bebop or UniswapX, the routers like Barter provide call data and provide, a route example and the potential outcome that would be received. And then, CoW Swap analyzes whoever, did the best job and how can they get the best price for the user. And if it was ours, then we handle this, route and transaction.
Got it. Okay. So from the point of view of the user, Barter is just a great way of getting the best outcome for the swap that you want to achieve. Now, obviously, you went from Uniswap, and then did you go straight into Barter? What was the next step from there? Sorry, you went from 1inch and then
yes.
to Barter. Was there anything in between, or was it one to the other?
Yeah, so I was at 1inch for 2.5 years. In DeFi, it feels like a lifetime, especially 1inch. It has this great hackathon culture that I personally really like, when you have to push and deliver and, be really fast. But it's also very tiring. And me and my family, we moved to Chile, and we've had our third daughter. So, I have a large family, many kids. Thank you so much. And yeah, I wanted to take a step down and look around and see where, the next biggest opportunities lies in terms of I also really wanted to look slightly outside of DeFi, because I've been engaged so much in this particular niche that I kind of miss a lot of things that were happening in AI, in other niches, gaming, deepin, whatever. And so I've been also actively angel investing, and I'm super passionate about stable coins. So I really like stable coins, and I was looking for projects that are building in this niche, and I was helping Overnight Finance for a while. And Overnight Finance is a really nice project. If you haven't tried it, it's a stable coin that's fully backed by USDC, and it's present across multiple L2s, and it has I would say, a similar design to Ethena. And I like that Ethena managed to achieve success, because I think Overnight got the timing wrong. After, the post-FTX, in December, January 2023, it was, tough times, dark ages.
Yeah. It's also, if it's doing similar things to Athena, is it doing a cash and carry model? So perps, covered calls on perps?
Overnight doesn't disclose exactly how the systems work, but it's a delta neutral stable coin with a lot of similar practices.
Sure. And what I was just going to say is, if it's the same, then it's very hard to make that yield high returns during a bear market. You need the bull market to provide the yields, to provide the funding rate, right?
Exactly. But we had decent TBL. It was 10 mil, and then it went to 50, and some good investors. But yeah, I was looking at it, and then Intense kind of happened, and I was always looking for a project with similar characteristic as 1inch in terms of technological expertise and just positioning on the market. And with Intense, it felt like there is an instant product market fit because you can join those platforms that already have, pipeline of orders like CoW Swap, UniswapX, 1inch Fusion, and start, facilitating transactions in real time, competing against best parties in crypto, like market makers, Vintromute or SCP and some others. So yeah, so we joined the sandbox environment, and we joined approximately February, March last year, and by June we were already 40% of volume on CoW Swap. So and it was felt really great because we know that for a fact that we are doing a great job. We are saving users money. We have a tag that is one of the best in the world, and so this is how my path was. And Intense also, it's along with account abstractions and other things, such an important part of crypto infrastructure because users should not care about, MEV, slippage, gas costs, taking care of all those minor things. They should just, receive, the best possible outcome and have this process simplified as much as possible. Otherwise, they would lose money and they would never come back. They would, go to Binance, Coinbase, OKX, and stay within those familiar systems.
Right. I think that the feeling of ease that you get for using something like Binance, because you're just like, I know that when I click this, I'm going to get the trade I want, and I don't have to think about like, am I getting the best price? Like, I'm probably getting a pretty good price, and to get DeFi to the point where it's actually adopted by mainstream people, that has to be the same. It has to feel the same. It's got to be that I just go here. I know I'm getting the best price, and I'm getting it as quickly as possible. Let's talk just a little bit about MEV, right? You've mentioned MEV a couple of times, and I know that sort of things like CoW Swap and things like UniswapX claim to reduce MEV or eliminate MEV. But if you could say, as simply as possible, like what MEV is and how platforms like CoW Swap and UniswapX mean that these things are able to be reduced.
Right. So MEV is minor extractable value, and it was, the term was coined by Flashbots a long time ago, and they kind of like unleashed this whole beast that is now one of the biggest threats to Ethereum and like crypto in general. But, whenever there is liquidity in different protocols, AMMs and other systems, whenever something happens to it, and most of those AMMs and platforms, they run through formulas and they have like some kind of rules that are part of smart contracts, and they have to be followed. When, for example, imagine like there is a pool where there is like some stable coins and ETH, and whenever I swap their pool, kind of like the balance shifts. And but the price of Ethereum effectively didn't change because it was a small trade, for example, and the price on centralized exchanges or platforms with much more liquidity kind of stayed the same. So whoever has a chance to rebalance it has this arbitrage opportunity, risk-free, where they can extract like easy profit for the action. And it's kind of, I would say, unfair because liquidity providers, people that funded and created this pool, they can lose money. And, a person that was swapping and trading, you're not getting any extras for the swaps that they performed. And MEV bots, they profit out of it. And there are like many types of MEVs that can be like that was one of the examples, but there are many more ways how can someone that, is building a block, extract this extra revenue either to themselves or to a user or to a debt. And no one has really solved MEV yet. Platforms like UniswapX and CoW Swap definitely do reduce it in a way. However, there are a lot of concerns like who is actually profiting from it. And we've had this proposer-builder separation, and now, block builders, seems like to have a lot of power because they, are the ones that combine those blocks. They're getting bribed for some arbitrage activity and transactions from bots, where they, gain this extra profit. And so very tough, very complex problem that no one yet has solved so far.
So just to sort of read that back to you a little bit. On MEV, what we're saying is that MEV is a problem from the point of view of when I, as a user, submit a transaction to the network. Say I'm swapping wrapped Bitcoin to Ethereum. The transaction doesn't necessarily get confirmed in the order that it was submitted into the network, because there's this separate process that's going on. So I, as a user, go, I want to swap wrapped Bitcoin for Ethereum on Uniswap. My transaction goes into the mempool where the nodes are running consensus, and I can be reordered. Like when I submitted, something can go ahead of me and something can go behind me, and those could be swaps across the same pool that I'm trying to swap, and that could actually massively affect the price that I actually receive. Right?
Yes.
So I understand that. What I don't understand from what you described is, why would CoW Swap or UniswapX improve that? What is it that they do that would make that less likely to end up having the user being arbitraged by people who can reorder the order in which swaps happen on a DEX to profit themselves by taking slippage away from you, by arbitraging the price away from you, all this kind of stuff?
Right. So I think it all kind of goes into those special relationship with block builders or systems. But CoW Swap has built MEV blocker, and MEV blocker is like a separate thing that the transactions do not land in a public mempool where everyone can see and kind of take advantage of it. And the block builders that have access to MEV blocker, they are sharing those extra MEV profits that might occur not on purpose, but just because the market shifted and happened back to CoW Swap and its users. And so this is a way how CoW Swap protects it and reduces.
So just to read that back a little bit, you're saying is, they're not stopping it, they're co-opting it. They're basically going, look,
correct.
This is a problem. What we'll do is we'll build a system with the people who have the power, and we'll do it in such a way that when value is extracted, we get some of it, a proportion of it, all of it, and we can then just pay that back to the user. So even though you might have been reordered, the cost of that reorder, some of it will be refunded to you. And so as a user, I don't care, some reorderings happened, it may have affected me, but if it did affect me, then I'm probably going to get some payback from that. So overall, I'm happy. There's still some fun and games going on, but ultimately, I'm net zero on it, so I don't really care.
Right. Exactly. Well, it's MEV is a really complex problem. Everything is running on smart contracts, and the infrastructure from bots is fantastic. They analyze, the state of Ethereum, and whenever an opportunity strikes, they will extract it. We had an idea of how we can fight MEV as a solver, and it kind of was inspired by CoW Swap and a coincidence of one's thesis, where you batch and match users' orders together, and instead of routing to AMMs, you settle two transactions against each other. And CoW Swap has a great thesis, but user UIs are super sticky. Imagine aggregators. I've worked at 1inch for a long time, and aggregators were always saving users money and would always provide better rates than DEXs, like Paraswap, 1inch, 0x. Better rates than any DEX by themselves. However, a lot of people would still swap through Balancer, Uniswap, Dodo directly instead of going to aggregators. And CoW Swap has this good thesis, but it's really hard to tailor all order flow of DeFi onto one platform, because some people, they for example, Uniswap token holders, they trust in the brand, they love what Uniswap has built, they want to use that. Or some people want to use MetaMask swaps and other systems. And however, if there is a solver that's present across all those different venues, and it can see an order happening at the same time on Uniswap and CoW Swap and maybe OneInch Fusion and other routers, it can probably connect them together. Not probably, it can potentially connect them together and provide a superior rate, and would not tap into AMM pools and kind of eradicate MEV and save users on gas costs, because RFQ transactions are cheaper than tapping into AMM liquidity. So yeah, this is one way that we have and we see of how we can fight MEV, but it's a long way to go, and we need to sort of figure out how to do it in a decentralized fashion and not rely on centralized servers that matches and analyzes those users, those transactions real time.
So again, just to
absolutely let's do it.
Just to make sure I understand, right? Like, part of this is I'm incredibly jet lagged. My brain isn't working at the normal speed. But part of this is also just trying to make sure, because this is really complicated stuff, and I just want to make sure that everyone who's listening to this podcast is keeping up as well. So, what you're saying is you don't put liquidity into anything. You basically just say, we have all of these people who are declaring what it is what they're offering. They're saying, hey, I'm offering this amount of Bitcoin for this amount of ETH or whatever, and you can come to me for some of it, all of it, and here's my terms. And your router is just going, okay, what does this user want? This user wants this. There's all of these people are providing offers, and I will stitch that together and go, right, filled from the point of view of maybe 20, 100 different offers, and you get back what you want. And the reason that there is an MEV there is because you're not actually swapping across a curve. You're just taking specific offers at specific rates, aggregating it together and going done when it's done. Is that right?
That is right. And let me, add a few points to it. So everyone is talking about intents, but if we simplify intents, they are fancy limit orders with conditions that can be used to, facilitate transactions. But if we simplify intents even more, intents are liquidity from people that I actually want to, perform a swap or perform some kind of action, and they're willing to provide this liquidity at certain conditions. And we are trying to, find this equilibrium point where we, combine this liquidity from various users that I kind of want opposite things, and they have like opposite things to each other, and bring it together. And we've been, this is one of our ways of how we can fight MEV. And it was also one of the reasons how we can, wanted to compete and, I wouldn't say fight, but compete with market makers. Because I've had this, FTX, Alameda, troublesome experience. And even in the past, I've seen like in 2018, 19, how centralized exchanges gain too much power and become a problem for everyone in the market. And it feels like market makers in DeFi are extremely powerful. They have incredible infrastructures. They're very smart. They facilitate a lot of transactions. They have money to, build the whole pipeline of products, like the block builders. Like 2 out of 3 biggest block builder belongs to, major market makers. And This kind of creates not very like DeFi environment. We don't want a DeFi to turn into TradeFi 2.0. And, our idea of how we match users' orders is we feel no room for any middleman, including market makers, to improve this price when we match 2 users' orders at the equilibrium rate. And this is what we want to do.
I think I might fight you on one thing here, right?
Please,
which is,
go ahead.
I'm not sure, and I think this may be like actually a philosophical point, but like, I'm not sure that I would necessarily call. So on a market, just from the point of view of the audience, there's normally described as a maker and a taker, right? So you have the maker who is providing offers on the order book that anyone can come and take, and those offers are opportunities to buy. And then you've got a taker who is someone who's taking those offers. I feel like there's still that concept here. Like, I'm coming in and I want to buy, and I'm not, and I'm saying, hey, I'm buying, and I'm buying. Most of those orders from people are probably taker orders. Like, from the point of view of me coming in and wanting to use a solver.
Correct.
I'm not sure a taker order is liquidity. I think that only the maker one is liquidity. I can see that you could debate it both ways, for sure.
Right.
You could say, oh, it's a limit order at the market. It's like, okay, fine.
Yes.
But the point I think that's interesting here is the reason that market makers are so critical to the crypto ecosystem is because they are the ones who are constantly willing to provide liquidity to the market for what people, and like, I think that most people don't realize is on exchanges, even though a lot of exchanges say they're peer-to-peer, actually what's happening is it's not that that there is enough swap volume happening from people who are takers to be matched with other people who are takers. Actually, normally what's happening is it's people who are takers are being matched with people who are makers because you're taking things off the order book. So the question I have, and we're just coming up to time, so we'll have to make this brief, even though this could be a very long conversation, is if you want the power of market makers to be reduced, it feels like market makers are kind of critical to make this system work. Like, you need to have as many people as possible for your coincidence of once, for barter to occur, to constantly be sitting there with offers that aren't being filled, so that people who are coming onto the market going, I want to be filled right now, are actually filled right now, and you don't have a market that can't trade because you don't have the coincidence between the participants. So how do you solve that?
So let's go a few steps back and try to address this question. First of all, with what are the problems with like market makers? And those are the same as the problems with centralized exchanges. We don't know anything what's happening behind the scenes. We don't know how deep their books are. We don't know, like, we cannot verify the ways they operate. And so there is a lot of untransparency and uncertainty, and we cannot analyze margins, if how profitable they are, how how much value they actually extract out of the system and benefit from the unique positioning in a way. But we can analyze all of those from smart contract levels, from AMMs, and from different protocols. So while I agree that market makers are critical and necessary and should be present, I still believe that, crypto is getting better and better. Liquidity is getting more competitive. If you look at like Uniswap version 1, version 2, version 3, every new iteration is like a major improvement in terms of efficiency. And actually, liquidity on chain is highly competitive. I'll give you an example from my past experience at 1inch. So 1inch, was always like really good at routing through on-chain DEXs. It's an aggregator. And 0x had initially the 0x protocol, where they had all those great market makers. And they had, at one point in time, they had Jump Crypto, SCP, Wintermute, Autonomy, all the big names. But, there is a MetaMask, and MetaMask is a sandbox environment. They don't care if it's 0x or 1inch, facilitates the transaction, as long as someone like provided the best rate. And 1inch was still number one, provider for MetaMask swaps, because actually on-chain liquidity is competitive. It's good enough, it's deep enough. So we don't rely that heavily on market make. We shouldn't. We should, route through, systems where we can analyze, liquidity, accessibility, and efficiency of how they operated. So this is what we are trying to like rely on, and kind of move the markets toward that. Okay, if you want atomic fulfillment, don't go to a market maker, go to an AMM or a protocol, and we will kind of help you. Or we can wait some time, a minute or two. Actually, our research showed that if you wait for like 25 blocks, you can definitely score a coincidence of once. Not definitely, but I would say it's over a 65% chance that you will have coincidence of once and you'll get this like better rate. And this is what we are trying to do. And another problem that we haven't touched
on. As long as the price hasn't moved. As long as the price hasn't moved, right? Like 25 blocks is a long time to wait.
Agreed.
If you care about the price.
Agree. But you know what another thing that we notice that when the price starts moving, there are actually still so many like activity happening for like the mainstream pairs. Like Ethereum is going down and a lot of people are selling and a lot of people are buying, and they are all kind of worsening this MEV and all those issues that we have. But if they would be matched together, that would be better for everyone, and we would save them quite a lot of money. But another problem with market makers, the last one, and then I'll stop, that they actually worsen liquidity fragmentation problem. Because Wintermute, for example, has $100 million on their hot wallet, and they, know the assets and they know the price, and they tap into this liquidity that no one else potentially, for example, can tap into. And, this is not the way DeFi and crypto and blockchain should operate.
Interesting. We could talk for a very long time.
Absolutely.
It's been super having you on the podcast, Nikita. Thank you so much for coming on. If people want to find out more about Barter, they can go to barterswap.xyz. That's exactly how it sounds. Barter as an exchange and swap as in to swap something.xyz. And if they want to find you on Twitter, how should they do that? Or on X?
Barter DeFi, is our Twitter account. Please follow. We are trying to, make DeFi trading and dance and swaps great again. Thanks so much for having me. It was an absolute pleasure.
Awesome. Thank you, Nikita.
More utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline. Building the future, I feel like a savage.